morning, welcome to IG's early morning call. Midweek trading session, Wednesday, 12th of July. Let's take a look at the headlines as we continue to monitor weakness in the US dollar, which is giving some of the markets around the world a bit of a steer. We've got US CPI later out today, which we expect to show figures still continuing to ease off from the recent highs. And it's all about central bank decisions today. We've seen the Reserve Bank of New Zealand staying put. There's not much move for the Kiwi. A little bit of interest around the dollar CAD, as the Bank of Canada is seen raising interest rates by a margin of 25 basis points to try and get on top of that stubborn inflation. And oil prices marching to a 10-week high, breaking more levels yesterday. The EIA has cut its production forecast for this year, 2023, and as a result of that, we've got a little bit of a push up in the price of oil. Oil might be up, but volatility on the way down again, fourth day in a row of declines. We are expecting some small gains at the start of today's European session. If anything, I think the London market's a little bit of the poor relation, but we did see a market which on the 24-hour session yesterday did see a trade pretty much the top of the candle, which indicates that we're not many sellers, if any, at 7,300 yesterday, which is where we start off today's session. In fact, we are up a couple of points. A margin of 0.06% up from the 24-hour close yesterday. So a little bit of a buying interest in the London markets. But I think really the real interest, I think, has been in the European markets. Absolutely the top of the candle yesterday on the 24-hour markets on the German DAX, and building on that at 15,860 as well today. So long trade across the European session at the beginning of today's trade, seeing these markets up. We're very close to this line of what is resistance just ahead of us, which I've drawn on since the lows that we had on here back on the 19th of December, supporting the markets until that breakthrough on the way down on the 23rd of June. And you can see recently we tested that line at 70.83, and that was acting as a springboard for the markets and the French session to rise. Let's take a look at what's been happening overnight in the Asia-Pacific markets. Interest in the equity markets have been seen across some of those markets overnight. Nikkei 225 down over 1%. The Hang Seng Stock Index and the S&P ASX 200 up on the session today. The reason why, I think partially the reason why the Nikkei has been on the way down is because we've seen a return to some strength of the Japanese yen. I was talking about this yesterday in the markets. I'll take a look at that in just a few moments' time. But the long Japanese trade still remains the case as we see that dollar pullback. As I said, we'll get some more details on that in just a moment. Wall Street closed yesterday, in part dominated by software news yesterday. Microsoft and the UK's Competition and Markets Authority have both agreed to pause their legal battle over the proposed Activision Blizzard acquisition in order to further negotiate. Microsoft has just won a separate ruling with the US federal court against the FTC and the CMA, the last regulators preventing Microsoft's Xbox maker from completing its Activision Blizzard deal at $68.7 billion. Now looks like that's going to go through. And that was seen positive for tech stocks yesterday, but you can see here a broad market rally across the session yesterday for Wall Street. I want to begin with the Dow, with that rise that we saw yesterday. We are building on that in the 24-hour markets at 34,271. These markets really back to some sort of bullishness. This is the tech-heavy Nasdaq at 15,144, again, building on the close we saw in yesterday's session. As I said at the top, there's been some activity in the central banks today. We've already seen some activity around the Kiwi because of what's been happening with the Reserve Bank of New Zealand. It's decided to keep its official cash rate at 5.5%. Now, this decision was widely expected after the previous meeting. Its Governor Adrian Orr said the bank was seeing borrowing costs peaking at that level. The central bank in New Zealand was one of the first banks to withdraw its pandemic-era stimulus, and since October 2021 has raised rates by a total of 525 basis points. Now, the RBNZ committee says that the OCR will need to remain at a restricted level for the foreseeable future. That's the official cash rate, which is the benchmark interest rate that New Zealand works to. I want to show you this chart here, which is what we've got here for New Zealand dollar trading against the US dollar. You can see it rising today. Partially this obviously has been weakness in the US dollar. So even though inflation has come off in recent months, New Zealand is still dealing with inflation at 6.7%. I think this is one of the reasons why it's still possible to buy the Kiwi. We've been buying the Kiwi against the US dollar recently. I want to show you the Kiwi as well against the Aussie dollar. Now, this is the Aussie dollar reading first against the Kiwi. So this is the Aussie dollar pushing up here. And since then, we've seen a bit of strength come through for the Kiwi. Like everywhere else, the fight against inflation has a cost. The New Zealand economy is currently in a technical recession. Talking about central banks this afternoon, a little bit later on today, I think it's about 3 o'clock today, we get the Canadian Central Bank, the BOC, is seen adding another 0.25 percentage point to its overnight rate, taking that to 5%. Concerns about inflation have risen again in recent weeks. The headline inflation has been almost constantly falling since June last year. Core inflation, though, appears to be stickier. Core CPI has been falling, but at a slower rate than the main index. Just want to show you what's going on with the Canadian dollar. Just want to switch this chart on here to the USD against the CAD, just to show you what's going on ahead of that interest rate decision today. This is the US dollar heading down lower against the Canadian dollar. In other words, money going into the Canadian. So this at the moment is showing a long trade going into the Canadian Central Bank meeting decision later on today. As I said, they are widely expected to add 25 basis points. I think it's really all going to be about what the central bank says about the overall picture for its outlook. The dollar continues to weaken in the markets in today's trade. We've seen a real march lower for the US dollar. I'll show you the chart here for what's going on with the dollar basket, which you can see quite clearly. This is the basket of currencies against the US dollar. The dollar down in the last couple of days. It's broken that line of support at 101.47. It's on its way now down to the lows we saw back on the 14th of April at 100.37. In the longer term picture, you can see that once it breaks this level here, lower than where we are, the next line of support goes down to 97.68. In amongst some of the other moves that we've seen in the markets, this is sterling trading up against that weaker US dollar. Now not too far away from the 130 level. We've been talking a lot about this recently. And once it crowns that, I think then there's further potential upside to go. The headline consumer price index in the States is expected to decelerate to 3.1% in June year on year, down from 4% in May. Core CPI growth is also expected to slow to 5% after a 5.3% print in May. Now, since March, the headline US CPI figure, the Consumer Price Index, points below core inflation. Energy prices have substantially fallen, but broad-based inflation seems more stubborn. The real big trade around the release later on today will be this. This is the euro trading against the dollar, the euro rising against that weaker US dollar. In yesterday's session, we rose to, but didn't quite close beyond the 110.12 level, which was the previous line of resistance. It has now got an entire candle above that, and we are now trading there at levels not seen pretty much since the beginning of May this year. So euro dollar would seem to be the way to trade this. Long euros against the US dollar. If you are long on this on a day trade basis, your stop goes below the 110 level. Let's switch out of foreign exchange markets and central banks and take a look at what's happening with some of the main messaging coming through from the RNS this morning from the London Stock Exchange for some of the companies we're wanting to follow ahead of the release of the first trades at the top of the hour today. I want to talk about this one. This is JD Weatherspoon. This is a head and shoulders pattern on the far right-hand side of the chart. We've seen like-for-like sales in the first 10 weeks from the pub group at the end of the final quarter of the financial year, increasing by a margin of 11%. Year-to-date sales increasing by 7.4% compared to the same period last year. Like-for-like sales up by 11.5% on fiscal 2022 in the fourth quarter and by 12.9% year-to-date. The bottom line is this rise that we've seen in the stock has been justified because of these numbers. People going back to the pub as a regular feature. JD Weatherspoon is quick to point out that the company has opened 3 pubs and sold or closed or surrendered to the landlord 28 pubs. Now, Tim Martin has come out and says this is not a fundraising exercise. It has raised 63 million, apparently, 6.5 million. It has apparently due to the sale of these. That's the net cash inflow from the 28 pub disposals. 22 pubs remain on the market. The company currently has a trading estate of 827 pubs, so it's still tinkering around at the edges. As of the 9th of July, net debt was 688 million, down around about 114 from this time last year. So where do we go from here? I think it's difficult to work out precisely what happens as a result of what we got this morning from the pub group. We've seen 3 days of gains. We are expecting a rise at the start of the day's trade in Europe, in the London markets particularly, but it's not a particularly big rise, so I can't see that really twisting trade. But this head and shoulders pattern for me is interesting. The reason why is because it came up with a shooting star candle and took us up to levels there not seen since the 30th of March. Since then, we've seen this right-hand shoulder develop. And I've drawn this head and shoulders here, and how to trade a head and shoulders. We should really have covered this when it broke down on the 9th of June, because that would then been an opportunity to short this market, which would have been the trade to do, and you'd have made money out of it. Now, if you see a continuation of the direction of travel here on the head and shoulders, you'd be then looking at this support line down here at 581, which was the low point we saw back on the 24th of March. See that big green candle there? Now, that was the last interim update from the company, which was particularly strong, which is why we saw this liftoff in shares. I don't think we got the same sort of strength this morning coming through in the numbers. That being said, the business is making more progress in terms of revenue. We don't see any profit and loss account details on the numbers today because this is just a trading update. So we don't get any depth and analysis. So I'm not expecting anything like the move up we've seen there today. If we do get a move up, your stop goes below the 650 level. It starts at 662.5. But if we see a continuation of this pattern on the way down, I'd be a seller down to this line of support at 581. In amongst some of the other companies worth watching this morning, the recruitment company Page Group, one of the biggest recruiters across Europe, has seen some interesting trading recently. I want to show you the chart. As I talk about the Q2 numbers released this morning, big gains in yesterday's session, closing at 422. Gross profit for the company, 263.5 million, compared with the record 280 million this time last year. So that is down for the second quarter this year. The company says it continues to face a tough labour market. The full year outlook, though, it says is in line with consensus. When you consider what happened yesterday, this is pretty much a Marabouzu candle. It means you went in at the bottom and you pretty much closed out at the top of the candle at 422 yesterday. Whilst temporary recruitment is up 11.1%, permanent recruitment is down 11.4%. I think for me, this says a lot in the current market conditions, is that employers do need staff. They are recruiting, but they are only recruiting temporary. They're not recruiting permanent staff. Overall, the UK has seen down 17% in terms of overall jobs. The EMEA up 1.4%, France flat, Germany up 6%, the US down 16%, interestingly. But Greater China, which isn't a particularly big part of the business, was down 32% for Page Group. India on the way up by 5%. But the broad sweep of things is the biggest market here in the UK is down 17%, and that I think could potentially possibly be a little bit of a headwind for the stock today. That being said, we'll have to see how things open at the top of the hour. Now, following last year's abortive attempt by Nvidia to buy the rival chip maker ARM Holdings, ARM is now wanting to bring Nvidia in as an anchor investor. Now, this is according to a report in the Financial Times this morning, which says the tactic is to pump prime interest in ARM's spin-off later this year from parent company Softbank. Japanese business Softbank wants to list ARM in an IPO in New York, possibly as early as September. Nvidia, which is one of the world's most valuable semiconductor companies, was forced last year to abandon its planned $66 billion acquisition of ARM after the deal was challenged by regulators. Now, Softbank bought ARM for $32 billion back in 2016 from its listing here in London, a valuation that Softbank aims to double on the sale of the business in September. Many private tech companies and their advisors are watching closely to see if the ARM spin-off can succeed in launching that IPO this year after a year-long slump in new listings. It might have been a slump in listings, but we've seen record highs for Nvidia recently. The biggest, most recent rise to records has really been all about the fact that Nvidia is leading the charge and leading the globe in artificial intelligence. It supplies chips for this business, and it is doing great business on the upside. The stock will open all sessions on the IG platform this morning at $424.18 at 9 o'clock today. That's when the all session stock starts getting underway. But the real face-off, I think, will come whether or not Nvidia gets its goal of becoming a major investor in ARM before the listing. And if it does, how will it take part in the IPO later on this year? Let's move away and take a look at what's happening in other areas of the market. Let's take a look first of all at what's going on with oil, because we've seen oil rise, and indeed in the session this morning we've seen it punch further on past this previous line of resistance at 74.70. It did do that briefly yesterday, taking us up there to levels not seen since the beginning of May, so at 2-month highs for the price of oil. Price is broadly flat overnight during the APAC session, but rising to that 10-week high yesterday after the EIA cut its 2023 US crude oil production forecast. The EIA also adding that the oil market should remain tight in the second half of the year, citing strong demand from China combined with a supply cut announced recently by Saudi Arabia and Russia. Let's take a look at what's happening with Brent, because there was a quote yesterday from the EIA, and it says that it now expects Brent to average $78 a barrel in July. You can see here that we are at 79.07, so that's higher than the average that the EIA now expects, and up to $80 a barrel in the fourth quarter of 2023. Yesterday, the OPEC Secretary General said that the organization was seeing global demand for all forms of energy rising by 2023, by 23% through to 2045, and added that limiting or stopping funding new oil projects was unrealistic and unwise. This has been one of the big things about what's been going on in the oil sector, is that the drive for zero carbon has meant that there's a lot of protest groups around, for example, Just Stop Oil. And this is one of the reasons as to why these big oil companies have been rowing back on their investment in new pipeline. And because we've seen that rowing back in new investment, there's lack of oil coming on to the market. Also yesterday, the US crude oil inventories rose by about 3 million barrels last week, according to the API. Gasoline and distillate stocks also rising respectively by 800,000 and 170,000 barrels. Let's go back to the charts and just round you off with what's happening with the price of gold. We've seen this little bit of a lift off, and that continues in today's session. We're currently trading at 1935. This line of support at 1910, very much in evidence. I was expecting further weakness. I was looking for a candle close below the 1910 to take it on down to the 1870, which would coincide with the 200-day moving average. That now at least looks like that trade's over. I would have been stopped out had I had a short trade on that, but at the moment we are seeing some bullishness in the price of gold. How long will that last? I guess partly depends on what's happening with the price of the US dollar, which has been one of the recent rises, one of the recent reasons why we're seeing gold rising. I just want to show you quickly what's happening with copper. 83.73, not much move on from yesterday's close. That's it from me. We're back at 10:30 with Charting the Markets. Do watch out at the start of today's trade, JD Weatherspoon and Page Group, two stocks of interest at the beginning of today's session here in the London markets.